Hey everybody, it's Pete. Good morning. Welcome back from a long 3-day weekend. If you like me, enjoyed the weekend, that's for sure. I got to spend some nice time with family. Hopefully you did as well. I traveled during Thanksgiving. Thankfully, the airlines and the variants seem to be getting worse over the weekend. I am super happy that I was not stuck somewhere at an airport this weekend. I hope that you were the same. So what do we got this week? We got a really vicious rally into the close on Friday. So in this video, we're going to talk about which stocks I'm going to be looking to buy this week, which stocks I'm going to be looking to build positions in this week. I got a sector that we're going to talk about this week that is not near the top of the list, but working its way up the list. I'm going to pay attention to that today. So we're going to dive into that sector as well. So we've got a lot to cover. We're also going to talk about last week and the end of every year, we have our end of year recap. And this year was ridiculously awesome. It was so good that we only got through half of the coaching call. And as we mentioned last week, the 4 questions that we gave everybody, the first call was 2.5 hours. And we're actually going to follow up on that call this evening. So it's probably going to end up being about 5 hours worth of additional coaching that everybody's going to get to the end of the year. If you happen to be a member of the boot camp, we're actually giving everybody access to download the audio, the video, and the transcripts. So that's something that you have permanently in your trading education. But how does that affect you, right? The biggest thing I want to talk about right now is the top 5 insights that we got from the coaching call so far that I want to share with you and hopefully walk you through how to overcome what wasn't working and how to get to the other side pretty quickly in your own personal trading. So we're going to kick Monday off, a full week of trading this week with a ton of stuff we're going to talk about. Obviously, we're going to kick it off first with the top stocks I'm looking to buy this week. So stick around. I'll be back in just 1 second. Okay, so thank you everybody for joining me here today. I really appreciate it. Obviously, everything we talk about here today is for educational purposes. It's up to you to make that final decision. It's my mission to help you become a better decision maker. So I actually want to start out with something that I think is pretty interesting. We, especially newer members of the bootcamp and Swing Trade Tracker for that matter, came into the month of December after October was amazing. And then November kind of got split into the first 2 weeks of November were pretty good. And then from November over into most of December, quite honestly, was choppy, and there's really no other way to put it. And I know we brought this up on the charts, but I want to bring it up anyway here, which is this price action over here. Basically, from the second week of November over, the market has been choppy. It's directionless, and everybody should be able to tell in a heartbeat what this looks like compared to what this looks like. And then if you zoom it out on the weekly charts a little bit more, you can see in that same time frame, a week of selling after making new all-time highs, followed up by another week of selling, followed by a week of buying, followed by a week of selling, followed by a week of buying. So what's the point here, right? We got a ton of questions, and look, let's face it, there are good questions, and we're going to get to those top 5 insights in a minute. Why didn't we trade more? And especially on the swing trading side of things. If you're a regular viewer of the channel, you know that one of the biggest things that we focus on is exactly this: the weekly chart recognizing the tape. And the tape is how obvious is the current buying and selling pressure from one week to the next. Now, you see, we do a lot of stuff on the daily chart. So we're not talking about the daily charts right now. We're talking about going out to the weekly charts on the major markets, the sectors, and then breaking that down into your individual industry groups and the stocks you're trading. You want to write this down. The weekly charts are the charts that are the most obvious for the most recent tape. The longer time frame is the order flow. The weekly is that condensed price action that tells you is right now validating the longer term order flow. And that's something you want to write down. It doesn't matter if you're a day trader or a swing trader. You need some measurement. You need some price action, some significant price action that tells you right now we are confirming what I see in the bigger picture. And ironically, the last week and a half in trading has actually confirmed the fact that we're going sideways, which is we're getting the back and forth, back and forth, back and forth. And I just want to bring this home because it's a trading lesson that ties into those top 5 lessons that I'm going to show you in just a minute. And these are 2 articles. The first one is in CBS Market Watch, and this is what a lot of people experienced during December. Now, the reason I'm bringing this up is that we're getting far too many people writing in and say, oh my God, we closed at all-time highs. Why didn't we trade more? Why didn't we hold more swing trades? Why aren't we more aggressive? Why were we booking profits? That's why. The market was anything but obvious. You have to get out of your mind the fact that it went higher doesn't mean you missed an opportunity. So I want to keep going on this theme because it's a really big thing, and I'm going to give you the ideas in just a second. Okay. So zooming along and getting into this article, which was last week. All right. If you've got the market figured out, you're among the few. Okay. And we zoom on over to Investors Business Daily. Basically the same type of conversation. The most volatile December since the 2018 bear market. Add in lack of obvious rotation and trendless action, swing trading gets even more challenging. So we've actually been doing the same exact thing on the swing trading side of things. If you want, again, to see your account grow like this, you have to adapt to the price action. Every single day is not the same. If you think every day is the same, you do not have an edge. You need something that tells you now is the time to get more share size. Now is the time to hold longer. Now is the time to build positions versus this market's an effing mess right now. And I need to be managing risk. I need to be booking profits, probably a little bit more reduced, probably a little bit less share size. And when we move in our favor, be a little bit more aggressive to take some of those profits. And I'll show you actually something that we did last week where we put on a trade and Apple scaled out of the position and are now trailing the balance. Normally, we'd be looking for that push in the pause and looking to add the position, but the market has been too much back and forth. So we've been locking in those profits as opposed to adding to those things. Now, I know that sounds like a lot. However, I'm going to get into the top 5 things. I keep pointing up there because that's my other monitor. I keep pointing out to that because if I teach you anything, if you learn anything from being a part of our community, whether it's here on social media or in the boot camp, it's that you need to learn to adapt how you apply the strategy based on current market conditions. You don't change the strategy. That's a big problem that I see with a lot of traders is, well, the market was tough this week, so I need a new strategy. No, you don't. You need to stick with your strategy and then adapt your strategy and adjust your strategy based on the market conditions at that moment. So we talk about all the time, there's edge, scan, and script. So you have your edge, you scan for stocks that match the edge, and then you script out your game plan. But you don't change the edge because you scanned and couldn't find that much. I can't stress that enough. If you have your edge and you're scanning but not finding a lot, that simply means the market conditions right now at that moment don't match your edge. But if you believe in your edge, if your edge has made you money over time, do not be rushing to change the edge simply because right now's market conditions are a little bit challenging or less than obvious, I think is probably a better way to word it. So I thought I was kind of excited to have, proof that if you found December, especially on the swing trading sides of things, a little bit more challenging, that wasn't you. That was tougher market conditions. And if you're just looking at it and saying, oh gosh, I missed so many good opportunities because the market rallied to the high over the last 5 days, I got some statistics for you. Most of December, the majority of stocks were below the 50-period moving average. That is that last line in the sand that says, okay, right now, if you're below the 50-period simple moving average, you lay off it a little bit because it's not a better trading opportunity, especially from the swing trading side of things. So I just want to give some context that if you found December challenging, I mean, we were still profitable on the swing trading side of things, but we had a little bit less share size and a little bit less activity. But look, let me tell you something. If you recognize the conditions and you've never traded as a professional trader before, sometimes you don't even realize that maybe a small loss for the month, and I'll even go, I'll go into the loss side. If you don't have context and you haven't spoken to somebody who's a professional trader, somebody who's quit their job and living off their profits, sometimes you could do everything right and not make money. But if you end the day, the week, of the month with a small loss, that's actually pretty good trading. Because if you did not recognize it, continue to trade aggressively, and you dig this giant hole for yourself, that's not good trading. So you need context to understand and whether or not you traded well, whether or not you recognized the conditions correctly. And quite honestly, the other side of that, which also if you're trading at home by yourself, sometimes you don't know, is that you might have felt, I made $2,500 this week. That was a really good week. But if it was an amazing week of trading, multiple sectors were going higher, the market was going higher, and nothing pulled back for that entire 5-day period, maybe you should have made $5,000 for that week, but you don't have context. So what I'm trying to walk you through right now is you need to understand what great conditions look like and trade the heck out of those great conditions, what tough conditions look like, and then adjust to manage risk. And if there's any profits, be a little bit greedier to take them quicker if the market conditions are tougher. So I just want to, again, we've been so crazy in December with my experience where I'm telling you, December is the time to reflect back on everything you did this year and whether or not it was working based on profitability or not. Eliminate a lot of what doesn't work and start to work into that list of everything that did work, which is those were the big 4 questions that I gave everybody last week. So I hope that I'm giving you some, again, we have another 7 days still left in, not 7 days, we have this week left in the year to trade. Spend the downtime to think about what absolutely worked. Spend some downtime going over your profit and loss statement and saying, what did I make money in? What did I not make money in? Was it sectors? Was it a particular side of the market? Was it a particular strategy? Is it a group of stocks that you think you're making money in because you like to trade them, but you can't make a dime? That's a big insider thing too that a lot of traders don't pay attention to. Like, oh, I love to trade that stock. But then you go into your profit and loss statement and you see over the last 6 months, you love to trade it, but you're not making money in it. You have to learn to go in and do these things and make adjustments, because that's how you see your account grow month after month after month, because you're paying attention. So what we're going to do now is we're going to work our way over into some industrial stocks that are working their way up the list. Then we're going to go over the top 5 things that so far that we've learned from our end of year coaching call recap. And then we're going to dig into a bigger list of stocks to trade that are not necessarily from the industrials, but other stocks that I'm considering buying right now. All right. So we're going to actually head on over to the charts. And we're going to take a look at industrial stocks. We're actually going to go over to the weekly chart, the daily charts, and work our way over into some of those stocks. So Paychex, P-A-Y-X. Now, here's the thing, and I want to get this across as well. What I'm discussing right now are ideas that are going into my game plan. Then from the game plan, I determine how close are we to the optimal entry. Then if I determine it's still worth it, then I position, I figure out position size if I want to be in the trade at all. So we got a lot of questions and a lot of good feedback in the comments below here about what do I mean by optimal entry. And I want to give you this lesson because I want you to hit 2022 with maximum confidence that you are ready to make money. The optimal entry is you need to know the history of the stock that you're trading. Every stock has different average true range if you're day trading, and every stock has a different average true move if you're swing trading. Average true range is what it does from the low to the high over a certain amount of days, typically 14 days in most software. And I'll show you how to find that in a second. The average true move, you need to look at the stock itself and look at the most recent history. If you want to be a buyer, how much does that stock normally move in a swing? And again, our swings are usually anywhere from 3 days to 3 weeks, or basically in that window, because we're looking for the next move. We're looking for the next move. So average true range and average true move. Those two projections, and I use projections very lightly because projections are they have like this mystical thing that you're forecasting. We're not forecasting. We're projecting what the stock normally does. The average true range. Let's actually pull up. We're going to pull up Finviz.com just to give everybody some context. So if you go in here and you type a stock on the top here, and you type in, we'll use Tesla as an example. You just go into the top and you type in Tesla. and you scroll down over here, you can see Tesla has an average true range of $59. Let me zoom that in a little bit there. You can see 59.62. Now, what is average true range? You can see it says average true range 14. So that means that over the last 14 traded days, from the low to the high, not how much the stock moved from the previous close, from the low to the high over the last 14 days, Tesla moves an average of $59.62. So if you're looking to day trade Tesla and find the average true range, obviously that gives it to you, but find the optimal entry, you now know it normally moves $59. So if the optimal entry is 0 and you have $59 left, that's pretty darn good. But if the stock's already moved $50, you have to say to yourself, okay, there's still some potential, but how much should I risk based on the fact most of what it normally does is already used up? Now, before you ask, it's a great question, but it can go higher than that. I've seen days Tesla's gone $100. Of course, we're talking about what we're willing to accept for risk, the initial entry, in exchange for the likely profitable trade. It can always go further than that. But what we're walking you through is finding the optimal entry to even put the trade on. Then hopefully, like us, you have a profit maximizer, which tells you how to hang on to that trade. So that's average true range. So Tesla, in this example, you can see is 59.62. If we walk over to another stock, let's say, let's use Rivian, which is a popular one over here. Is 11.39. So you can see there's a big difference. So every single stock has a different average true range. Now that's on the day trading side of things. The same thing on the swing trading side of things. Again, you don't need to predict. Simply look at the stock and go to the left and say, when this stock has a bullish rally, and let's be more specific, a bullish momentum rally, which means the next push before the pause. Look to the left on your chart and say, what does this stock normally do? Then, once you have that number, you now go and look for, well, where is the optimal entry based on what the stock normally does? So you need to put in like an extra 5 seconds worth of work to determine where is it now based on what it normally does. So if we take a look at paychecks and we work our way over to the left, and let's actually put the 50-period moving average in here just so we can qualify some bullish moves and zoom out. So the most recent move just went from 122 to 137, so roughly $15 here. So if we go to this most recent move here, this is the most recent bullish move, 116 to 124. That's only $8. Even if we go to this next biggest move here, we're looking at 103 to 112. We're still looking at around $9. So think about what we're talking about here. Yes, the stock had earnings and it came out and that pushed it a little bit further than what it normally does. But it looks like the average true move in a bullish move for paychecks is roughly $10. And that's actually on the higher side. And right now the stock has already gone almost $16. So how does that translate into putting on a new swing trade in paychecks right now? Well, if it's already gone probably 20% more than it normally does, if we're going to put this trade on believing the next move is also going to be higher, but the profit of what the stock normally does has already been taken up, that means that for us to get into this, our initial position, our initial part of this deal, which would be a new swing trade in paychecks as an example, would be a little bit less share size on the initial entry because it's already done what it normally does, and in this case, even more. So we're not putting a limit on what it can do because the earnings were great. The stock exploded and rallied pretty hard, but it also factored in and went an extra, let's say if it normally moves 10 and it went 15, even 16, it went an extra 50% of what it normally does. So the earnings catalyst is factored into that move. So personally, if we are close your eyes, pretend we're on my trading floor in New York City, and if we're having a discussion about this, you say, Pete, I really want to start allocating money to paychecks right now. Earnings was great. The stock exploded last week. I think I want to hang on to it for the next month or so. I'd be like, great. let's take a look at it. We'd work the trade and be like, okay, the stock has already gone further. It's pretty far from the optimal entry for a new swing trade. Put on your probe, as Jesse Livermore used to call it, or a couple of people I used to trade with, they used to call it their tier 1 entry, working their way up to tier 4. Tier 1 being your initial entry. We call it the starter position. I'd say let's use Myers as an example. I'd say Myers, what we do here, let's say we want to get up to 3,000 shares. Let's put on maybe 500 just as an initial piece. We know that the stock's a little bit extended. It's probably going to fluctuate a little bit. Know how much you're going to risk on the first trade. Put on your first piece. Get it into your position summary. It's probably going to dance around a little bit after it exploded this much. Once it pauses, settles down and pauses, it starts to take off again, then we'll start to add to that position. You do that same thing for average true range on day trades and the same thing with average true moves on swing trades. So Paychecks, again, we're talking specifically about industrial stocks now. So as I call out stocks, I want you to automatically be thinking to yourself, can I picture where this stock is from its average true move and optimal entry? And that's going to help you determine position size. Okay. Initial position size. That's a big thing. All right. So Paychecks is one of the stocks that meets that criteria right now. FedEx, which also had earnings, it had a big gap here and pulled back. You can see we actually talked about this last week. Resistance. And when we gapped up over here on earnings, we were super clear about this. This is the third time that it's hitting the same price that sellers came in. We're not doing anything until it gets above that level. Again, got some feedback. So you said we're buying it today. That's not what I said. I said selling came in 3 times. This is a significant level for us to watch, and we're still watching it now. We above 255 is where I'd start to look at building a position. So we're sticking with industrial stocks right now. Okay. So 255 in FedEx. BLDR has been in the list for a while. And again, your mind should automatically be quickly looking like, okay, look to the left. Where's the optimal entry? And how does that become optimal position size? So if we're going to talk about FedEx, we're obviously going to talk about UPS as well. UPS, a little bit of trading range. Looks like it's having a bunch of resistance here, 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 and here. So for me personally, I wouldn't do anything. I'm looking for it to get above this 216 to 18 level before I do anything, which, by the way, that little snippet that I just said about I'm not doing anything until it gets up to that level because sellers keep coming in and smashing it down. That's actually one of the top 5 things that we have from our coaching call that I'm going to give you in just a minute. Okay. I said it quickly, but it's a big deal. I just wanted to make sure I pointed that out. Okay. So other stocks in the industrial area, ADP as well. ADP actually just broke out. Now, again, you can see where is it compared to the optimal entry and what the stock normally does, and how does that affect your initial share size. 1 or 2 other ones I want to point out, Lockheed Martin, LMT. You can still see that the stock is in much longer term bearish order flow. But what I'm watching right now is this. The last 3 times that it got up to this price of 350, we actually, sellers came in, and we're right back there again. So I'm right now looking at 350 to 380 as the next move. But I need to see what's something I want to point out here. Look at volume decreasing on these 2 days up into this resistance. I need to see a day like this, but green, breaking through this 350. Then I will consider, and I need to see it stay above that level. So Lockheed Martin's another one in the industrial area that I'm watching, but not necessarily trading. And Caterpillar, basically the same thing. You can see it's gotten up to a level that it keeps failing at, and Boeing. So what I want to get across here is something that I think is kind of important. What we just mapped out is a sector that's working its way up the sector rotation sheet, but not necessarily the bigger picture where a lot of those stocks are breaking out. Some of them are breaking out in a big way. I'll focus on those. The stocks that we just talked about, Boeing, Lockheed Martin, Caterpillar, they're not ready yet, but the sector is moving higher. So I'm going to keep an eye on those, but trade the other ones. And if all of them start to move up, this is what we talked about at the beginning of the call. You start to make an adjustment if that sector and an industry group starts to light up, or many stocks now are starting to do the same thing, then I'll make an adjustment, which, oh my gosh, look at all those stocks that are strong right now in the industrial sector. That means that what I do now is I start to size up. I start to hold longer. I start to use the profit maximizer, as opposed to right now what I'm doing, it's a little bit more mixed, and I'm just trading for a little bit more cash flow. So I am literally scripting out what I plan to do before it happens. And if it does, I'm ready. If it doesn't, that's okay. So now I'm going to walk over to some other ideas that are some other top stocks that I'm looking to buy this week, and stocks that have actually been breaking out and or strong. LYV, we've had a couple of conversations about recovery stocks. You can see LYV broke this downtrend, got back above the 50 and paused after a 3-day rally. So we're looking for LYV to follow through this week. EXPE, very, very similar chart. But again, if you look to the left, and now this should be, hopefully right now, again, to end the year, this should be something you spot like that. If we're looking at EXPE, what should be the first thing that goes through your mind right now? How close are we to what I believe, meaning you, how close would I believe that we are near the optimal entry right now in order for me to put on a new swing trade? So you should be in a heartbeat right now and say, wow, EXPE, great price action last week, but if I want to put on a new swing trade, where am I to the optimal entry? Where am I based on, if I bought it at, if it normally has $20 profit target, where's 0 right now? Where am I between 0 and 20? In this case here, we're probably up towards the top piece of that move. So if we're looking at a new swing trade in the XPE, we're probably going to pause, if not pull back a little bit here. So if you really want to get the share on, which a lot of professional traders do, they'll put on that initial share size. So it's in their position summary and they're reading the tape. They'll watch it go up, go down, go up, go down. And then all of a sudden it stops going down as much, had a small piece on, starts to rally, and that's where you put on more share size. You're managing and reading the tape with lower share size with the goal of adding to that position. Okay, so EXPE is another one that actually had a pretty good move last week. Micron, hopefully you participated in this one after earnings. The stock pushed up, paused for 2 days, had a really big day on Friday. HLT as well. Alcoa took off. NEM took off as well. And finally broke through that level that we've been watching for a while. D-Dog, which is one that we have not been watching for a while. Earlier in the year, it was amazing. And this is really what we're looking at right now. Can it stay above this 3 weeks worth of selling? As of right now, it looks like it did. But more succinctly, I am looking for D-Dog to get above 185 before I do anything. Now, we just talked about a whole bunch of different ideas, right? And the list could be endless for what we could possibly look at today. Half of what I just talked about was what I'm looking to trade right now, today, this week. The other half of what I just talked about is putting stuff into my tracking journal, which means I set alerts. If it gets up to that price, then I plan to do something. So if you really think about what we're talking about today, is I'm setting up today's ideas, this week's ideas, and potential future ideas, but I'm scripting out right now what I need to do before any of those happen, which kind of takes me over into the top 5 things that so far that we've learned in our end of year coaching call, which again is where I said, open the wound and let's talk about what absolutely didn't work. And let's talk about what did work. But I want to give you some of the things that didn't work right now, simply because I want you to think, are you taking these actions and are they holding you back? Because these are pretty universal obstacles that probably all of us have made. And it's not recognizing that will make you special. Recognizing and stop doing them that will make you a special trader, because the traders that can spot it and stop it, those are the ones that see their account grow week after week and month after month. So I'm going to pull them up on the screen right now, and you can take a snapshot of this, maybe come back and watch the video again. So here's the top 5. Let me actually make this a little bit bigger so it's a little bit easier to see. Let me get into the font and make the font just a little bit bigger. All right, trying to guess a bottom. Number 1, holding losing trades too long. Trading too big, and too big relative to your experience level. I will say that again. There's actually 2 different stages of trading too big. Not doing the game plan work and not having conviction in your winners. Now, what's kind of interesting is these 2 are related, and these 2 are related. So I'm going to leave that up on the screen. Hopefully, you can take a snapshot of that right now. Now, let me make that a little bit bigger so it stays on the screen and something that you could see. I want you to really dig deep into this, and hopefully you can see that. Okay, perfect. So trying to guess the bottom. the amount of people that came into the boot camp in the last 2 months and spent time talking about stocks that were getting absolutely crushed and asking me whether or not I could help them find an entry. So needless to say, the very first part of that conversation was, what is that really the best idea that you have on the table right now? And I always go back with the question because I don't want to just say yes or no. That's the worst kind of mentoring you could possibly do. I want you to think. If you made the investment to be in a boot camp and you're asking me about an idea, I am going to make you think like a professional trader. So I immediately come back with, is that the best idea you have right now? Which instantly shocks the trader out of what they're thinking right now. And they have to embarrassed say no, embarrassed in a good way. So let's be clear about that. Inside the other side, in the community, we're very adamant that I want you to participate, but you don't have to if you don't want to. When I say adamant about participating, I mean you step up, get out of your comfort zone, and you learn. So when I come back at you with that way and ask you, is that the best trade you have on the board? You clearly know that the answer is no. But what you're looking to do is catch the exact point where you think it's going to turn around and you're going to have the best price. I will tell you the number one mistake that I made probably for the first year and a half that I traded was trying to catch a top and bottom. And here's the story that I gave everybody last week. The stock would be going up and I'd be like, oh, it's up 6 days in a row. It's going to roll over. It's going to go down. I'm going to start putting on this short sale. And I'm working the trade. And the stock would roll over a little bit, maybe a little bit. I'm like, yeah, I'm starting to make some money. And then it would catch a bid and start going back up again. Ending the day. And here's the thought process, because I know you're doing the same thing because I did it. You're like, oh my gosh, the stock kept going and going and going. And I kept trying to, and I didn't make any money, but I also didn't lose a lot of money. And I'm so good at managing trades. And you're proud that you're trading against the obvious order flow. In this case, you're trading against the selling, and you're proud that you manage the downside. But what you should be angry about is the fact that there's so many other stocks that are in obvious bullish order flow, and you should have been looking to buy those stocks as opposed to looking to short sell them, which is kind of the opposite here of trying to guess a bottom. It is a low probability, money-sucking, brain-draining idea. Stop. This was probably one of the top things that we discussed on our call the other night, which is number one, trying to guess a bottom, which you don't need to do. Number two, losing trades too long. Holding losing trades too long means that you have this belief inside of your head that I need to hold this trade because it will be the last trade I will ever have a chance to make money in for the rest of my life. I'm holding this loser because I'm afraid I'm never going to have another chance to make money. Bullshit. It is one of the dumbest things you could do. And I'm telling you, I've been waking everybody up over the last 2 months saying the tape has changed. The numbers under the hood have changed. We just gave you the stats before about the amount of stocks below the 50-period moving average, even below the 200-period moving average. Holding on to losing trades right now. If you have only traded since the pandemic bottom, you are in for a rude awakening if and when the market pulls back a little bit. The market can be more irrational than most of us have money in our account. Get out of your mind that trading with a stop loss is bad. Let's rephrase that. Trading with a stop loss is smart trading. Any trading book that you find, any good trading book that you will find worth the money will tell you stop losses and managing the downside are the very first thing that you need to learn. You don't learn to manage the downside, you will either, one, blow up your account and be done, or number two, keep refunding your account. Keep putting more money in, more money into your account simply because you can't take a loss. It's a business expense. Get over it. Put your ego in the corner. Get over it. If a trade doesn't work out, it simply means that entry in the direction of your good idea didn't work. Next, trading too big. There's two different situations where trading too big is a problem. Number one, trading too big relative to your track record. And this is by far a monster problem for new traders. Is they focus on if I had 1,000 shares and this thing moves $5, I'm booking $5,000 without any experience at all at managing the downside or managing winners, which we're going to get into that in a second. By far, Trading too big is the biggest mind drain that you will have, is because now you're not focusing on whether or not you're actually trading well. You're focusing on whether or not you're making money. And I know that sounds stupid, but if you don't learn how to make money, you're only going to be lucky once in a while, and you don't want to be lucky. You want to be good. So the first scenario is trading too big relative to your experience and your track record. The second one is trading too big relative to the market conditions. We just talked about the last 5 weeks have been really challenging. I personally have reduced my position size because there's been less on the table. So we've been working into positions after our initial entry. We've been booking profits into momentum moves as opposed to looking to build on those trades because the market's been less than obvious. Next, not doing the game plan and not having conviction on winners. These last two are kind of tied together. I'll give you one more chance to take a screenshot of that right here. These two specifically, but all of them, not having conviction on your winners. And if we kind of work our way over into the opposite of not having conviction on the winners, is also hesitating getting into a position. So raise your hand if you hesitate sometimes before a trade. It's because you don't have the conviction in the idea, because you didn't spend the time to develop an edge and then spend the time to scan for stocks that meets the edge. Remember, you want to write this down. Edge, scan, script. That's where conviction comes from. You have conviction because you put in the work. So if we do not doing the game plan, you're not going to have conviction in the entry. Not doing the game plan and not paying attention to how it's unfolding, you're not going to have conviction in holding the winners. I'm going to tell you this right now. Holding bigger trades longer, holding winning trades longer takes conviction. The biggest problem that traders have is they have a small profit and they're not okay with risking a small profit in exchange for a monster profit. That's a mental thing. And by far, one of the things that can change your trading in a heartbeat, but it takes a little bit longer to learn because you actually need to trade in order to learn how to trade that way. Some people call it trend trading. Some people, we call it the profit maximizer, maximizing your winning trades. Sometimes we hold them longer. Sometimes we're booking profits. But either way, to have conviction to enter and to have conviction to hold, so getting rid of doubt and hesitation and getting rid of the desire to take a small profit, both of those come down to doing the game plan, putting in the time to do research, putting in the time to read the news, putting in the time to do your scans, putting in the time to develop your strategy. Obviously, everybody in our community will have my strategy, the order flow method, and stacking the order flow, but you need that prior to trading so that you make more when you have a good trade and you trade less when there's less to do. So we covered a lot of stuff today, but you're going to see a theme over this week heading into the end of the year. I'm going to keep giving lessons during these calls during the week because I want you to experience what it's like at the highest levels to get ready for the next year by learning from last year. I will tell you by a mile, most people in life, never mind traders, continue to do the same thing and they get frustrated why they're not getting a better result or the result that they wanted. It's not your goals that are the problem. It's the processes that you have that are the problem. It's the process that's getting you the result that you have right now. If you are here right now and you want to be here, there's a gap in between. That gap in between is the process that you're currently using. Look, you want to join the boot camp? I'd love to see you on the other side. I'll give you my process. You get everything from A to Z. If you want to stay here on YouTube, that's 100% okay. That's up to you. But I'm telling you, the problem, the conflict between your current situation and where you want to be is your current process. You need to work this week and every day, but especially this week because we're heading into the new year. You need to work on the process. What part of the process is not working and do I need to eliminate or improve? So again, I'll put this up on the screen one more time. Take a picture of that. Are any of these things a part of the current process that you have right now that aren't working for you? So I want to leave you with that because every day this week, we're going to talk about stacking the process into narrowing it down. What's working, what's not working, narrowing it down, do more of what's working. But you really need to spend some downtime. turn off Netflix, turn off HBO Max, get a notepad, and start mapping out the success that you want to have for 2022, and stop blaming the market. Stop blaming other people. Look in the mirror. That's the person that's going to help you the most, but only you can make the decision to take that downtime and start getting ready and scripting out your success for next year. There's going to be opportunity. I'm going to take advantage of it. People in our community are going to take advantage of it. The question is, are you going to take the time to map out how you plan to be successful next year? All right. I'm going to leave you with that. Have an awesome day, everybody. By the way, if you found some value here, do me a favor, smash that like button and hit the subscribe button so that you get some updates. All right. Have an awesome day, everybody. I'll speak to you tomorrow at the same time, 7:30.